So it's been a pretty tough day out there in the market for the last 2 days, and we've had 2 negative days, and all of a sudden this bullish market that we've got, everyone's suddenly gone really negative on a couple of stocks, and it's like, whoa, where's this kind of come from? 2 days of a bad market and everybody's freaking out. And I'm seeing this as well with individual stocks like Inmode. I'm actually seeing people being so bearish on Inmode, and we'll go through some of those reasons why, but I'm actually seeing people panic selling Inmode and saying, oh, I've given up with this company, it's a terrible business. And I'm like, where has all this kind of come from? I've not seen this much negativity since 2022, and we've only been there for 2 bad days. I mean, I don't know how some of these people survived in 2022 when we had a year and a half of the market going down every day. I mean, obviously a lot of people left the market during that time frame, so probably newer investors that are doing this, but I can't believe the fear that is out there, and in fear with like stocks like Inmode. I'm even getting people in the comment section of my videos trolling on Inmode, going, look at Inmode, it's down, that's a bad stock pick. I've not seen this for a year and a half. I've been like, hold on, I've not seen any of you guys from like 2022. Where have all these trolls come back from in the comment section? I think they've been hiding away in the mum's basement, cursing DraftKings, going, oh, I hate DraftKings and I hate hims and hers. That they've finally seen the stock go down and the 2 days of negative market, and they're all going, Mum, I'm going out for the day. I've got some comments to type on a YouTube video. It's crazy to see like the negativity that's kind of come out of 2 bad days, and seeing negativity on like stocks like Inmode, and I'm seeing people panic selling Inmode, and I generally can't believe it. I'm seeing people thinking that they're calling it a bad company, and I've never seen anything like this for a company that is throwing off this profitability and this balance sheet. And we'll go through some of the reasons why that people are panicking around it. I mean, mostly I think it's the share price, but there's a couple of other reasons, and today we'll talk about if it is the time to be panic selling Inmode. Hope you enjoyed the video. Let's get started. So Inmode, INMD on the Nasdaq, currently $20. Now, like I said, I think mostly people are fearful on it because when stocks go down, people panic. I've had a lot of questions in the last few days about Inmode, and the reason probably why is because the stock's gone down in the last few days. People panic when the stocks go down. If the stocks go up, there's no panic at all. Fear is the biggest emotion in the stock market, we said before, and I think this is causing people to panic. Now, realistically, so far it has had a bad year, but I think the big thing was the last year. It was a pretty bad year for Inmode, and it was a tough time. Now, I've got to say, Inmode at 1.7 billion market cap and 9 times earnings, I think is actually a pretty good value, and I'll show you the reasons why a little bit later. But we'll go through some of the reasons why people are selling the business. So first of all, the big thing that people are kind of pointing out is that insiders are reducing their stake in the business, and people going, oh look, they're reducing the stake, that's no good. Well, I hate to break it to some people, but Inmode's actually still a relatively new IPO. The stock actually IPO'd in 2019. Now, actually, since then, the stock is still up 195%, and financially, the stock is in a very good place, by the way, when you look at the financial growth that they've done in the last few years, apart from the last few quarters, which we'll look at. But financially, they've executed, and from a profit point of view, it's still done very well from a share price point of view. It's still up from its IPO 195%, which is very good performance. Now, when you IPO, you have a lockup period. You cannot sell in that lockup period for however it is. I think it's normally 9 months. So if you actually look at Inmode, there's only really the last kind of 3 years that Inmode you've been able to sell shares on Inmode. Now, if you're an insider point of view and you have recently took the stock public, you've been the CEO since 2008. There is reasons why people take these companies public. I think sometimes people think that Inmode was taken public, so Dave that lives down the street can buy an Inmode. They go, oh, Inmode will come public, so Dave can buy some shares. Come on, let's be serious. There's reasons why companies go public and IPO. It's not because they want Dave from down the road to become a shareholder in Inmode. The reason why companies come public is so the insiders have things to gain from. The thing that they want to do is probably make money on the shares. As a private company, it is really hard to sell shares and piece of your business when you're a private company. When you become a public company, you can sell shares pretty much instantly. So for some of these guys that are a CEO from 2008 and you are getting a little bit older, which some of the management team is getting a little bit older. So if you look at like Moshe, for example, he's actually now 70 years old. There's a point where you've worked on this company for many years of your life and you can instantly sell capital to get money for the work that you've put in. Why are they not going to sell some shares? There's got to be a reward for them to take the company public. It's not so Dave down the road can buy shares. It's so that they can also make money as well. And some people have struggled. We've seen the fact that people sell part of the company and get the rewards from it. That's why they've taken the company public at the end of the day, so they can sell shares as well and make money. People seem to get upset when people that have made the whole company sell some shares. It's absolutely crazy. And as well as that, sometimes it is to access capital a lot easier, which isn't in Inmode's case because the capital is very good. So I just can't believe it that people get upset because insiders sell some shares. Of course they're going to sell shares if they become public. They want to cash in. There's nothing wrong with that. I'd be more looking at thinking, well, BlackRock are now a big owner at 8% and they've been increasing the stake by 20%, and a lot of the insiders still own a ton of shares, so I won't get that upset about it. The next thing is the balance sheet. Now, you'd say that the balance sheet is absolutely fabulous. There's no debt on there. They sit on 741 million of cash and they're generating a lot of profitability every year. They're nearly doing 200 million profitability, which is absolutely crazy. And people are saying, oh, this balance sheet, it's too good. They need to be using the capital. And I've seen this a lot in the comment section saying no mention of the buyback. The reason why the stock price isn't doing well is because they do no buyback of shares. Now, I do agree. There's a point where Inmode, when they are in this healthy of a cash position and the share price is this low, it would make sense to do a share buyback. I agree, they probably should do it. However, I'm not going to fall out with a company and panic sell my company because they aren't doing a share buyback program. That's not the answer to everything. Look at Dropbox. We mentioned this on yesterday's video. This is a company that has done share buybacks, and where's this got them in the last 5 years? It's up 2%. They've reduced 15-20% of the shares outstanding and the share prices are nothing. So buyback of shares isn't the creator of great share prices as that some people seem to think at the moment. It's great, but it's not going to be the ultimate decider on the share price. So I don't think that people are realizing a buyback isn't going to instantly change it. And when you listen to the management team and the previous conference calls, they've said before, the board of directors decided not to do a share buyback because of many reasons. The reason why is they have previously done a share buyback before, and the board feel like they got no return on the share price point of it, so they don't want to do it again, which is absolutely fine. They have done it before, and they feel like it's not worth the cash. Fair enough. The management team have made that decision. You've got to stick with it. But the thing is that they are currently exploring an M&A, and I just feel like there's people that are just lazy investors that don't actually listen to what the management team is saying to them. They have been looking for an M&A for a while. They feel like that's a better use of their cash. And they might as well keep that cash on board, because if they're going to go and buy a company, let's say for 400 million, then there's no point doing a buyback, because then they're going to be left with 300 million cash and they probably want a bit of a safety net in there. What will be an issue is that if they don't do an M&A in a year's time and then they've got all that cash, then you might be looking at like, well, where are you going to go with the cash? But while they're saying they're still currently processing an M&A, and they say that there potentially could be somewhere in March with this M&A, then there's no point in spending the cash at the moment. They might as well keep that cash on the balance sheet. So you've got to look at what the management is saying to you, and they've mentioned this multiple times about why they don't like buybacks, and also they don't want to spend cash because they're currently looking for an M&A. And if they could find something that fits the portfolio very well, it seems like the right decision to go buy it. So I just feel like there's people that don't actually listen to what the management team are telling you, and that would solve a lot of issues. The other thing that I think is the big reason why Inmode hasn't been doing very well on the share price point of view is the revenue. The revenue growth has fallen off a cliff. If you do look at the company, it's historically grown at very good rates. Even in 2022, it was a company that was still growing 20%. And you can see here by the back end of 2023, we fell to basically flat and negative growth. That's the bigger issue, is the company is struggling to grow at the moment. Now, the reason why is because when you are Inmode, and Inmode sell these expensive machines, a lot of the people that buy these machines need to get it on finance. What's happening at the moment, if you want to get it on finance, interest rates are sky high. People are also cutting back with spending. So this is not an environment for Inmode, and they're getting affected by it. Now, if you think that they are never going to come back from this environment, then fair enough, you sell it. But I believe that when interest rates go lower and the consumer goes out there and spends more, and we have people willing to buy things on finance at cheaper rates, Inmode will go back into a good place. And that's historically shown before the high interest rate environment did kick in. And I think that's the big issue. I think the big thing is that when Inmode do improve their financials, we will get the reflection on the share price, and that will be the biggest decider on where the business will go financially. Not buybacks, not insider ownerships, financials. And I've got to say myself is that I do look at the business, and I've got to say, let's say the Inmode never go back to revenue growth here. Let's just say they stay basically flat. Well, I've got to say, the thing is that if you're still a company that's going to be throwing off 200 million in cash a year with a clean balance sheet, the choices you're going to have, I mean, I don't think it'll stay flat growth, because then your choices of M&As will be absolutely insane, and then they could even put it to dividends or through a buyback. I think they'll probably go down the dividend route, I'll be honest with you. If they were to do that, this company still at 9 times earnings, in my opinion, with no growth, is still probably worth more than this because of its balance sheet and the profitability it throws off. So I've got to say, even if it doesn't return to growth, I think this is a good valuation. The thing is if we do see Inmode actually then go back to the growth, and analysts are expecting a return to growth of 8% in 2025. If we do start getting those interest rate cuts, I think we'll be seeing the growth return. And if you have a company growing at 8% with this profitability, this balance sheet, I definitely think this is a company worth more than 9 times earnings. So yeah, I think I never thought I would see Inmode back at these sort of $20 levels from where it was last here in December time 2020. But we are getting those opportunities, which is definitely interesting to see. And the last one, and I save this one to the end because I think this is the worst of them all. A few people have been panicking because there's a class action lawsuit that's come out. This has actually been from 2021. And people think this is a major issue. Well, it's not a major issue. You'll probably see this quite often with companies. It's just ambulance chasers, and there's nothing significant here. If there's anything that is proven significant, they probably might get a fine of maybe 3-4 million. But at the end of the day, when you're a company that's throwing off 200 million in cash and got a cracky balance sheet like Inmode have, it's going to be no issue. So yeah, I think people are getting a little bit worried because they've never seen these before. These happen with a lot of companies, especially when stock prices drop. It's a lot of law firms trying to make a bit of money off people, and they end up going nowhere, and it happens quite often. And like I said, the 5%, maybe even less than 5%, that actually do turn out to be anything, they end up with only being a couple of million of fines. And like I said, when you're getting maybe a 2 or 3 million fine on a 741 million cash balance, don't you worry about it. That's the amazing thing about having a company that throws off that the profitability in that balance sheet. So yeah, I mean, like I said, I think overall people are just getting a bit carried away with a share price going down, not used to it after a year and a half, after seeing the market go up so much. I think people aren't used to seeing a stock go down, and I think that's created a little bit of fear. I think the trolls are looking for something. I think the trolls have been sat in the mum's bedroom for the last year and a half going, there's nothing we can say because everything's gone up. What do we do with ourselves? And they finally got a stock to go, yeah, Inmode, it's Inmode that is a bad company. I remember when the stock was going up like this. I've never seen anyone negative on Inmode for ever. And all of a sudden it's come a bad stock out of nowhere, and the only difference between where it is now is that the share price is down. So yeah, I think it's an interesting opportunity. And like I said, for me, I think that unfortunately it is being affected by this high interest rate environment. Soon it's out of this high interest rate environment and they can get the finance on the devices a lot cheaper. I think we see the growth come back. I think if you stick a good 8, 9, 10% revenue growth company, throwing off this profitability, this balance sheet, 9 times earnings, I think that you'll see this do very well in the next few years. So yeah, I like Inmode at these sort of levels, and I think there's a few people that are just panicking and selling and trolls out there because the shares are down. And I think that's what people get emotional about. And I think that over the long term, I think Warren Buffett will come out on top with this one. The stock market is a device from transferring money from the impatient to the patient. And I think if you are the impatient, you sell and you panic sell. And if you're the patient, I think you're going to hold this one and the wealth will transfer to you in the longer term. That's the video for today, guys. Hope you enjoyed it. See you in a bit.